Welcome to another episode of Real Estate Investing Explained. Here's today's question. For those listening who may not be aware of what cash on cash return is, can you explain what that is and explain why when you get your capital back out of a deal through a BRRRR, why does that make your cash on cash return skyrocket?
So cash on cash return is basically just the amount of cash flow you're receiving based on the amount of cash you initially invested in the deal. So if you were to invest $25,000, you put 25% down on a $100,000 building and you were to receive $2,500 a year in cash flow, that means your cash on cash return is 10%. Now, the power of the BRRRR strategy is if you were to actually buy the property at below market value, do some renovations, and now you find yourself all in with your costs at 80% of the market value. And let's say a bank is willing to give you 80% loan to value on that same property. You've built equity beyond what you've paid and what you've put in. So now you already have that 20% equity in. So at that point, the bank's basically allowing you to own the building with a loan without putting any of your own money in. And if that happens, then your cash invested is 0%, in which case, if you're looking at it, technically your cash on cash return is infinite on whatever you're making. The goal is to basically to create equity through buying below market or adding value through raising rents or doing a rehab or something like that, so that the cash you actually have invested at the end of the day is significantly lower than what you'd have to put in if you were to just buy it at market value, which means your cash on cash return can be 100%, 200%, or even larger than that because the amount of money that you actually have invested in the deal at the end of the day is so low.
Yeah, that's exactly why that strategy is so powerful. And not only does it make your returns significantly higher, but it also gives you all that capital back that you can deploy into another property. So now when you don't BRRRR, if you put that money into a deal, it just sits there and you can't leverage that into another deal. But if you get your money back through a BRRRR deal, you're able to put that into another deal and then another deal and another deal, and you're able to leverage that money multiple times over, which makes your returns even bigger. That's all for this episode of Real Estate Investing Explained. Be sure to follow me on Instagram, Twitter, and Facebook, or subscribe to our YouTube channel to get even more free content.